प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Let's take you through the headlines tonight. Sensex logs its worst daily fall since April, dives over 1100 points. Nifty gives up 17,900 mark on expiry day. All sectors in the red. IRCTC rallies over 10% after its stock splits in the ratio of 1:5. Share gains 97 rupees to close at 923 today. Paytm's 18,300 crore mega IPO to open on November 8th. Founder Vijay Shekhar Sharma tells Business Today payments industry is grossly underestimated. Nykaa IPO oversubscribed on the first day. Demand high among retail investors with the portion subscribed 3.5 times. Anticipation peaks over BTTV's report that the government could soon draft laws for cryptocurrencies. Industry seeks recognition and regulation. Key benchmarks cracked today in trade as selling intensified. It was expiry. Sensex logging the worst fall since April, slipping below 60,000 after tumbling over 1100 points. Terrible Thursday for Nifty as well, shutting shop below 18,000. Broader markets also saw heavy profit booking with the S&P mid-cap index and small-cap index ending the session down 1.4 and 1.6% respectively. Almost all sectoral indices on the BSE ended in the red. Banks, realty, metal, energy, these were some of the sectors among the worst hit. Major losers on your screen: Adani Ports, ITC, ONGC. In the banking space, we saw Kotak, ICICI, some of the top laggards in trade. Meanwhile, the India VIX surged 6.42% to close at 17.91. While a deluge of IPOs are hitting the Lal Street, companies from the startup universe are taking the lead. After Zomato and Nykaa, it's now Paytm's parent company that's getting ready to list on the bourses. The mega 18,300 crore IPO will hit the primary market on November 8th. The issue will be the biggest IPO in India's corporate history, with a price band fixed at 2,080 to 2,150 rupees per share. Want to know what the company plans to do with the funds? Well, earlier in the day, I had a word with Paytm MD and CEO Vijay Shekhar Sharma. Listen in.
In terms of a retail shareholder, people looking to get a piece of the pie, your employees, and I know you expanded stock options, and what is going to be the kind of implication for them? How many employees do you see becoming millionaires overnight? To sort of generalize, but give me a sense of that, and is there going to be enough for retail shareholders in the sense that there's two different questions. One, what does it mean for employees? And two, with existing investors selling so much stake, right? Is this the case where it's more of a secondary issue with it?
First of all, there is an obligation of a particular percentage of dilution. If we were to keep this price and keep all amount primary, the amount would have been so large that we did not even need that much amount of capital and dilution obligation. Okay. So we went to obligate, and then secondly, we are professionally managed company, so we had to get number of shareholders below 25%, and that means we had to call everybody and give them opportunity to sell. And surprisingly, we had to ask them to sell. I repeat it, we had to ask them to sell so that we are able to create a balance of dilution obligation and secondary sale. Because if a company is going IPO and you come literally 1 or 2, 3 years back, you're not going to sell. So if you notice, of the 100% of people we went to ask to sell, only 70% chose as a intention that we will sell. So we had to even ask more number of sales to sell. So number one, that is clear about it, that we believe that it's an incredible opportunity for employees, because employees but do you know that we have given liquidity more than 2,000 crore of ESOP liquidity has been handed over to our employees, which is a rare for a company in a private space and rare for an Indian company. And that's like 2,000 crore. So number of millionaires and multimillionaires we've had are really large. And I believe that there will be in thousands multimillionaires. I mean, in thousands. I mean, this is something that I'm very proud of. I benchmark our success as how much of success people we've created, how many companies, entrepreneurs we've created, how many people have made money, how many investors have made money. So IPO will potentially give them an opportunity of a liquid stake, which will give them an opportunity to champion cause of Paytm. And finally, even more important thing, IPO's liquidity will bring a currency to Paytm to recruit the best talent in the world, which typically international companies recruit in India and offer cash RSUs. So if you see Western tech behemoth, which they open its office in India, they suck hundreds and thousands of people, and they offer cash plus equity, cash plus equity, cash plus equity. Now Paytm can legitimately do it. So we see it as a edge over others in our recruitment planning.
Okay, fantastic. So Vijay, between payments, lending, etc., all your various divisions, where is the maximum traction? What's exciting you the most now going forward?
I think the payment is underestimatedly. I mean, we thought that payment is going to grow organically at a particular pace. The pace of growth of payment is growing in India.
Okay.
That is surprising. And second is that what is exciting me is that credit is a complex business because who's the credit partner? What is the customer experience to crack? I think we've been able to crack it. That is incredible.
Watch the full interview with the man of the hour, Vijay Shekhar Sharma, on businesstoday.in. All the plans are going ahead for Paytm and the financial services space. The Nykaa IPO opens today, a good time for us to take a look at the company and its business. Nykaa was founded by Falguni Nair in 2012. It sells beauty and personal care products, including high-end makeup and skincare labels. The business model takes inspiration from Sephora, a French multi-brand retailer that houses multiple makeup brands under one roof. In fact, founder and CEO Falguni Nair had said she decided to create Nykaa after seeing a Sephora store abroad. Nykaa has tie-ups with a bunch of international brands, many of them exclusive contracts, giving it an edge over competition. While valuations may appear to be expensive on a price over earnings basis, in fact, recent reports pegging it at over 7 billion, it's one of the few profitable retailers, online retailers in the country. 62 crores was the number it declared for FY21 compared to a net loss of 16 crores in FY20. Most brokerages, while citing concerns over the valuation figure, have given a subscribe rating to the issue. The brand sells its own products and the products of partner brands, which is the primary source of revenue. Nykaa is one of the few e-commerce brands to follow an inventory-based business model. They purchase products directly from manufacturers and store in their own warehouses, which are in New Delhi, Mumbai, and Bengaluru. So how does the company sell? Broadly split into three avenues: online, on-trend stores, and Lux stores. The bulk of their sales are through their website, and as of August 31st, the firm's mobile application was downloaded 55.8 million times. And in the last 5 months, 88.2% of its gross sales came through online channels. Let's talk about target audience. At present, a majority of Nykaa's customer base includes women in the age range of 18 to 35. They target them with heavy-duty social media and influencer marketing. Not just that, they also have their own pages in promoting their products. They have Nykaa TV, for instance, among some of the other things that they use to actually promote their products and help customers choose and buy on their site. And in a recent interaction at the India Today conclave, Sanjay Nair got candid about discussions on the Nykaa IPO around the family table. He said weekends are best to discuss strategic and M&A issues. Listen in to know more.
Falguni, of course, has a very exciting IPO coming up. It's one of the most anticipated of the year, the kind of valuations we're looking at, but also the story that she's built. She's, one of the very few female founders who's reached this kind of scale. It's a very inspiring story.
I think, look, full marks to her. I don't think I get any marks for any of this. I can just keep saying I'm the man behind the success, but I think she's built a very sensible business model. She's done it in a very capital efficient way. But there's a lot of runway ahead. And I think, I think it's just a lot of good execution that she's hung in there and done it. I think going forward, we'll see what happens. And we're not going to discuss much about it because we're in the IPO period.
So we won't talk about the future. Let me ask about the past. Were there doubts in the beginning? I remember when Nykaa first started, and the fact that they went capital intensive, right, was a big question mark. They were completely opposite to what some of the other players in the industry were attempting to do.
Yeah, I mean, obviously, along the way, we're not like funded by some big investors. We did our self-funding. So obviously, there was a lot of cynicism. But I think Falguni was very, very convinced that she wants to do it. I think she's got the right model. And look, omni-channel was a bet that they made early on. And frankly, that's the way to go. Because this is a very different market. This is not a pure e-commerce market as yet. Adoption rates are increasing, but still physical retail is huge, whether it's B2B or your own retail. So I think that was a bit of cynicism on that. But I think now I don't think there's any cynicism right now. I think she's done a great job.
And what is it like in a family where you're all sort of at the forefront of the kind of investment climate that we're seeing here in India? The kind of equation and the kind of the dinner table conversation.
We don't talk much at dinner table, to be very honest about this.
Both
because the whole family, both the children
both
in the business,
are also in
so
it.
they're discussing Nykaa all the time. So I don't think we discuss too much. I think we do talk on the weekends in some detail, especially on strategic issues, M&A issues, key decisions on investments. But otherwise, frankly, they pretty much run it. I don't.
Bharti Airtel betting big on 5G technology. Trials have already started in pockets of the country. However, in an exclusive conversation with Business Today TV, Chairman Sunil Bharti Mittal made it clear that he will bypass the 5G spectrum auction if the prices are not right, having earlier burnt his fingers.
One of that still not done piece of action could well be the one-time spectrum charge. I hear it's coming up on the 17th of November with the Supreme Court. Are you hopeful, hearing the telecom minister, that too will be decided in your favor?
Well, it's hard to say. I mean, these are things which are very complicated and complex. I know which way this cookie crumbles. All I would say is there is a TDSAT judgment which has been challenged by the operators and challenged by the department, and some decision must be done soon. In the AGR matter, the only regret that I may say I would have is that I wish we had lost this case at the first instance. We would have paid some 2,000-3,000 crores and be done with it. Having won the case in TDSAT once and again through a reference back by the Supreme Court, partially again, we were, as you know, slammed by a massive amount of money which had to be paid, which was, to my mind, spine-breaking for one of the operators and crippling for even Airtel. Very large amounts had to be paid. So therefore, cases must be settled expeditiously, and cases which have gone in favor of the industry, if they turn around to go against us, the penalties, the interest of all these long 10, 12 years should then be seen in a more sympathetic way, to my mind. So in the case of OTSC, whatever decision has to be taken should be taken. But I may, through this medium, remind everyone that this was, government action at that time, where they woke up to a price discovered many years later to then charge it retrospectively. It's like going into a restaurant, you read the menu, place the order of the dishes, and then at the end of the meal, when you have had a good, nice meal, the restaurant says, no, we've changed our rates now, you have to pay a much higher price. This is as simple as that. But it's sub judice, it's in the courts now, the government has to take a decision, the courts have to hour on it. So we just bow our head and wait for the decision.
Watch the full interview tomorrow, same place, same time, 10:30 p.m. here on Business Today Television. In other corporate news today, the Supreme Court has disallowed Bharti Airtel from seeking a 923 crore rupee GST refund. The Apex Court allowed the government's plea against the issuance of the refund, setting aside Delhi High Court's relief to the telecom major. The government had alleged that Bharti Airtel had underreported input tax credit for July to September 2017. IRCTC has tied up with Truecaller to help prevent large-scale fraud. Truecaller will validate critical communication to passengers from IRCTC like booking details and PNR status. The Indian Railways integrated helpline number will also have the green verified badge provided by Truecaller. A surge in Microsoft Corporation's shares has nearly unseated Apple Incorporated as the world's most valuable company. This a day before the iPhone maker reports its quarterly earnings. Now, 2 days ago, BTTV broke the news that the government is planning a new law to regulate cryptocurrencies. As expected, the exclusive news has created a huge buzz. Earlier today, Karishma Sudani spoke to the co-founder and CEO of CoinDCX, Sumit Gupta. Listen in to what he had to say on the evolving regulatory environment.
Let me begin by asking you, Sumit, given that the work on a legal framework for cryptocurrencies is underway, what would be an ideal approach for the government to consider?
Sure. I think first of all, this is a very positive and welcome move by the government of India. Was pending since long, and we, as one of the industry participants, were trying to have this discussion with the government and policymakers so that we are trying to bridge the gap in terms of how to regulate crypto best as an asset class. And I think after several discussions, there has been more clarity in the government around crypto as an emerging asset class, and the thought of moving away from banning crypto and in fact positioning India as a very strong nation when it comes to fintech innovation. I think that's going to take India far ahead than other countries and position India as one of the leading blockchain and crypto hub in the global landscape. In terms of the regulatory framework, I think all of the investors or all of the regulators work in the direction of investor protection. So I think the approach should be to understand the space, work closely with the industry players, players like us or other exchanges, and then figure out, okay, what is the best framework so that we can protect customers, we can protect investors, and we can also lay out guidelines which is not restricting the industry and create a conducive environment which is going to promote innovation happening in this space. I think that is very much needed so that we eliminate the bad actors out of the system and allow legit players to operate with full transparency, full public disclosures, so that the government can charge due taxes or they ensure that all the laws of the land are being followed.
Right, you just mentioned about the banning part. Now from 2018, when a draft bill was proposed to ban cryptocurrencies, to now that we're talking about recently, when government officials have indicated that a ban may not be feasible, do you think there has been a shift that you have noticed in the thinking of the decision makers?
Absolutely. There's a clear shift in terms of how government was thinking about it earlier. And a lot of it is driven by a lot of positive movements that are happening outside India. A lot of progressive nations have adopted crypto. They have understood that it's very difficult to ban a technology. In fact, instead of fighting against technology, it's very important to regulate, understand, and ensure that investors are protected. So I think that has been the driving factor. And also, it's not a very easy technology to understand. It takes a lot of time and investment to understand what's happening globally, and then how it can work in the favor of the nation, right? So that has took some time, but I think clearly, for example, earlier, crypto was seen more as a payment system, but it is actually not. It is not a currency. It's more like an asset class that a government should think of it, and that's how it has been evolving in other countries as well. So with that sense, I think a lot of that confusion which was earlier there, now it has gone away, and government is more open to the idea of adopting crypto, and that is clearly seen from the traction that players like CoinDCX have seen. Many millions of investors who are keen to learn more about it, and they're just waiting on the fence, waiting to get a nod from the government side. Is it okay? As of now, there has been a lot of positive movement, but earlier it was a lot of confusion around crypto, whether it is legal to buy, sell. Post the Supreme Court judgment, again, there has been a lot of positive movement in this front. And now I think from now on, it's just going to go positive from here, because government is now trying to understand and seeing what is the best possible way so that India does not leave behind in the race, but also becomes one of the leading players globally. We have got 45 million people who are associated with the IT industry, developers, engineers. Even if like 5% of them adopt this technology, India is going to be a global hub when it comes to blockchain and crypto revolution.
Business sentiment is at its highest level in 30 months. A survey by the Business Today magazine shows a big rebound in optimism, with the BT Business Confidence Index just shy of the levels it was 2.5 years ago. The marked improvement comes as corporate leaders shrug off some of those COVID-19 worries.
7 months ago, the situation was dire. entire nation was in grip of COVID-19 and a complete lockdown was in force. But with crowds reappearing in markets with a vengeance, times have changed fast for the corporate world as well. COVID-19 related uncertainties have receded, creating optimism for businesses, especially as against a particularly harsh situation in the previous few months. Other indicators like PMI, tax compliance, consumer sentiment and spending, credit availability, and buoyant financial markets have fed into the positive sentiment as well. All these factors have contributed to a sharp rise in Business Today's latest Business Confidence Index. In June, business confidence was at its lowest in 2 years. But about 3 months later, the sentiment has moved up to its highest level in 30 months.
There is a lot of positivity all around in terms of the high frequency indices. So whether it is tax compliance, whether it is the PMI indices, etc., I think that the buoyancy in the economy is what is making them feel much better and much more confident about the future.
Ratings show major improvement across all 5 parameters that form the survey: the overall economic conditions, financial situation, demand conditions, profit margins, and hiring conditions. And the optimism is spread across all kinds of industries, from services to heavy industries, where the recovery has been particularly sharp. The survey says that 45% of respondents expect a boost in economic activity and employment from the government's asset monetization plan. Some 80% respondents said they are financially prepared to deal with a possible third wave of COVID-19. Business leaders are sanguine about the December quarter as well. Apart from hiring conditions, ratings have improved for all other parameters: economic prospects of the business, overall economic situation, demand conditions, and profits.
Every passing sort of wave has turned out to be slightly easier to handle, and I think in terms of the COVID infection, and I think they believe that the corporate sector is now much better prepared to take on COVID-related disruptions in the future.
Industry is confident that with the inflation below the red line, interest rates will stay soft for the foreseeable future. The loan moratoriums and restructuring efforts have helped as well. The only hiccup is corporates may face financial stress when those measures are rolled back over the next few months. Bureau Report, Business Today Television.
And that's all we have time for on the show today. Thanks so much for watching. Do stay tuned. Lots more news and updates coming up.